Welcome to Business Beyond Borders, the go-to podcast for CPA firms seeking transformative insights. I'm your host, Laurence Whittam, and with each episode we'll uncover key insights, best practices, and invaluable resources tailored for CPAs. From trending strategies to diving deep into outsourcing and offshoring, our experts will help in all areas of your business. Hey everyone, and welcome back to Business Beyond Borders. So we have some interesting news that has come up on Friday, September 5th, and I figured we need to do a podcast. We need to inform everybody about what could happen. And again, it's very early stage right now, but on Friday, September 5th, what was Senator Bernie Moreno actually proposed a new bill called the Hire Act. Now, who is this going to affect? If this goes into place, this will affect any company that is outsourcing and offshoring specifically to a foreign national, okay? So, or a foreign company or anything of that sort. So obviously that affects the accounting firms, the CPA firms listening quite drastically. That also affects any of the clients and companies you're working with potentially as well. Now, this is just a proposed bill right now. So this is not gone into place, but it's something that is very important you understand, especially seen as though many firms are now outsourcing in some capacity. And a lot of firms have even built large capability centers offshore now. Right, and are doing a large portion of work offshore. And what the Hire Act is saying now, that stands for the Halting International Relocation of Employment Act, which was proposed to the US Senate. Now, overall, just from a simple perspective, what this does is it's going to enact a 25% excise tax on all payments made to foreign service providers when those services are benefiting US consumers. It is also going to remove any deduction that is currently in place now, which when you actually break everything down could be a much larger increase than just 25% additional fee that you would be receiving for any type of offshore or outsourced services. I mean, it could be as high as 80+% when you really break it down when it comes to the opportunity cost, which is obviously a huge drastic change. Now, this is targeted, I believe, personally, a bit more towards the IT industry. However, the way that the bill has been written right now, and again, it's quite a simple bill, to be honest, and there's a lot of room that they would have to improve on, to be honest, to put this in where people wouldn't be able to get around it. It leaves a lot of room for ways of working, and so that you could avoid this 25% tax as of right now. But it is definitely something we need to keep our eyes on, and it's definitely something that everybody needs to be aware of. It could obviously make a huge impact towards what you're currently paying an outsourcing firm. Now, this applies to all foreign people, right, from that perspective, but it excludes areas that are U.S. territories, right, such as Puerto Rico, right, which also could be one big reason for keeping an eye on this, is that we can potentially find somewhat ways around that as well and look at alternate areas to outsource towards, or have your outsourcing within, right? So you go to a country, have an entity there, and then you're able to outsource to another place like India or the Philippines and continue to do business that way. However, there are anti-avoidance measures that are in this bill as well that would have to be defined, right? And it's in my eyes going to be, if it were to go into effect, I mean, they put a date on there as December 1st, 2025, right? So every payment post that would essentially be taxed if it was enacted. I think it's way too big of a bill and not defined enough in order to go into place there. I am not a political expert by any means, but I just knowing how politics works, I just can't see that being the case with how it's outlined. I think there's too many nuances to this as of right now, and it would make way too big of an impact. I mean, just from a high level, like situational perspective right now, I mean, if we look at a C Corp doing this, let's say you're paying an outsourcing firm $100,000 annually, that currently is an expense that's fully deductible. C Corp, 21% tax rate. I mean, net after tax cost is about $79,000. So you're saving about $21,000, right, from a deduction perspective. Under this Hire Act, if it went into place as it is written right now, that would now, if with the same $100,000 payment, it would now be $2,000 additional. So you would actually be paying $125,000 now for that, which is a $46,000 difference, right? Which is enormous, right? I mean, at the end of the day, I mean, that's nearly a 50% increase, right? So now that is going to have to, the reason why we got to think about it now is from a planning perspective. I mean, we need to make sure we're taking that into account in any fashion, especially if you've got a larger offshore team that's working on that. We need to look at what our contracts look like, who's going to be paying that as well, right? So I mean, from my understanding of reading this bill, a lot of outsourcing providers have a US entity that you're paying, right? So technically you wouldn't be liable from a CPA firm to actually pay that tax because you are the ones that are, I mean, you're paying a US entity for it rather than necessarily like an Indian entity or a Philippine entity. However, now from a contract perspective, I mean, you've got to expect the outsourcing firms are going to come to revise contracts or revise payments because there's now going to be a huge tax on their side, potentially, if this were to go into effect. And again, I keep saying if this were to go into effect because this is an informational episode. It's is not in place right now, and I want to make that very clear. So not to worry, but it's just something that needs to be on everybody's radar if you are currently outsourcing and offshoring. And even if you personally are not outsourcing, you need to be thinking about it because your clients, or a lot of your clients most likely are outsourcing. So they are going to be impacted in some fashion, right? So now that leads to an opportunity in my eyes, right? I mean, as a firm, we need to be on top of it, right? This is a new financial related change in the tax side of things. So you as a firm, if you're ahead of the game, you can now, this can lead to planning opportunities with clients. It's going to lead to compliance opportunities, porting opportunities, right? But this is an advisory related offering as well that you can do. If the more you understand it, the more we can look at ways that we can obviously reduce those tax burdens for clients should this come up. Okay, so I believe, although I don't believe that this will go into effect as it sits right now, there could be some changes on the horizon because it's clearly being looked at now. So this is definitely going to come up. I mean, would make a huge impact to places like India and the Philippines, not just in the IT industry, but in a lot of industries. A lot of businesses have now gone out and created delivery centers for themselves. A lot of the Fortune 1000 have delivery centers offshore. So this is definitely something that's being looked at quite heavily, right? And bringing business and opportunity to the US. So we need to make sure that we're keeping our eyes on this. Like I said, whether you are outsourcing or not, it is important. So what should you do from here? Let's say in the case that you are outsourcing, okay, if you have your own team that's offshore, what should you be looking at right now? I mean, in my opinion, it's a little bit of a risk assessment. Okay, so should this go into place? Okay, who are you working with? How much are you actually spending on these outsourcing arrangements? Okay, and what type of financial exposure and risk do you have from that tax perspective going into 2026? Let's say if it did get passed and it went into place December 31st, 2025. Okay. What does that look like? Now, are we going to address that? Does your contract allow for flexibility around how much you can utilize? In a lot of cases, I know there are a lot of firms that are now building out their own delivery centers, and these are their team members. They care about their team members. They've had them on board for years now, and are their careers at risk now in a lot of cases because they're really only doing work for the US market? Because that's the thing. If they're doing work for anywhere outside of the US, that will not be taxed, right? So there is I think they claim it as like a mixed use. So if there is 50% of the work, let's say in India, being done for Indian taxes, and 50% of the same person's work being done for US tax, only the US work will be taxed. But it's quite a hefty amount, right? 25%. That's a big chunk. Okay. So let's make sure we're looking at our contract flexibility in a lot of cases as well, so that we can prepare accordingly. What are our alternative plans? At the end of the day, we are still in a place where we really need global talent to support the accounting industry. So what options do we have? Right? There are some options in the US, right, when it comes to fractional work that we can look at to potentially sort of offset some of that cost. Right. There are nearshore opportunities. So again, in some of the US territories, right, it's saying that that's not going to be the case. That's not going to have that same tax. So we can explore those types of geographies as well. In my opinion, it should be more of a hybrid approach. So really looking at just making sure we really plan appropriately. So what does our offshore look like? What does our onshore look like? Right. Even with this potential tax that's there. Okay. And what's that cost going to look like for the firm? And again, comparing that to current internal costs, right? At the end of the day, if we need to utilize people offshore, but we also need to much quicker get them up to speed with the work that we're doing, get them up to a productive metric that works for us, right? We may have to reevaluate certain billing, right, to clients to make sure it works as well. And at the end of the day, we've got to upskill that talent so that they can be more effective, right, for the firm as well. So just like when COVID happened, it sort of escalated a lot of the planning and the actual implementation of remote work. I believe now should this go into effect, right, this would again put a bit of it lights a bit of fuel underneath us to make sure our outsourced offices are being effective. Right. At the end of the day, we got to get them up to speed. We got to make sure we're utilizing them the right way, and we got to make sure it's effective for the firm, because especially if there's going to be this increased cost, we still want it to be, I believe financially, it still will be a beneficial way of outsourcing, right? Outsourcing, I believe, will still be cost effective in comparison to US costs. However, that margin will be stretched very thin, right? It will be much less of a difference with this tax that could go into effect. Now, and again, when it comes to the client side of things and planning, looking at it from an industry perspective is very important. If you are a firm that has a lot of IT and tech companies as your clients, they're going to be hugely affected if this bill were to go into effect. So from a planning perspective, you're going to need to help them put that into place. From a reporting perspective, it's also implied in the bill that there's going to be quite large and quite heavy restrictions on making sure that it's everything has gone into place correctly and making sure they're reporting it correctly. So there may even be audited opportunities. I think, again, I find it very difficult to really understand as to how they would even be able to track and how they would be able to really enforce this strongly. However, it's still something we've got to take into account as of right now and as of where it sits. Okay. And just being ahead of the game, just to understand it a little bit, would be very helpful. Now, and what it's saying is this tax is essentially then going to be pooled into like workforce development, retraining programs, apprenticeship programs, and then grants to states for, again, workforce development and those types of areas. So we will see. I mean, I think there are arguments against this quite strongly, because at the end of the day, I believe you're going to have huge industries lobbying against this, because it's so widely utilized, right? And that'll make such a huge impact on the utilization for global talent. But then there's also the fact that if we are using global talent, now who's going to actually suffer? I mean, most likely it's actually going to be the consumer, right? Because everybody's going to have to increase their prices again. So now the consumer at the end of the day is probably going to be the one paying that, or paying a large portion of that, so that the company can keep utilizing that talent. Right. So I'm not sure if it's a feasible, especially at that amount. I understand the idea of it, this excise tax, to try and reduce the amount of outsourcing to some extent going on. And again, the political party that's in power right now, obviously they want to make sure we're protecting American jobs. There's more jobs coming in. I just don't see this being a feasible way of putting that in place, especially when it comes to the accounting profession. It's just not feasible. I mean, there's just not enough accountants that are in the workforce for us to utilize. So even globally, like at the end of the day. So again, there's a lot going on right now. It's definitely something that should be looked into, especially if you have a good size of your expense that's going towards offshore teams. In a lot of cases, if you have a good plan or a plan in place to utilize offshore teams, I summarize the HIRE Act is not in place. It's just a bill that's being proposed, but it is something that we really need to look at in the profession and just consider, right? Because it could be somewhat of a risk or an internal planning need for us inside our own firm, but then it could also be an opportunity to look at how do we help our clients more because this is going to be something that affects so many businesses across the US. So I hope that's been helpful. Again, this is still, like I said, very early days. So I've sort of been reading up on it over the last few days to try and be as cognizant of what's inside the bill, what our risks are. I see there are, as it's written right now, there would be so many ways to somewhat get around this bill for any business realistically as to how it's written as of right now. So there will be, I'm sure before anything even goes into place, there would have to be ample revisions to it because I just don't see it going through as it's written right now, to be very honest. But again, it's something that we do need to consider. We need to think about. We know it's being looked at now, right? So how do we make sure that we've got a plan just in case, right? We always need to have that plan in the back of our mind just in case something happens. So feel free to reach out to me if you need any help understanding this more and in terms of your current situation when it comes to outsourcing or offshoring. I'm more than happy to help and have conversations around it. And again, this is something, please take note of it. This is called the HIRE Act. Once again, so this is the Halting International Relocation of Employment Act. Okay. And it was Senator Bernie Moreno just proposed it September 5th. So on Friday. So definitely something to have a read about. I've got material. I've got access to the bill that was currently submitted as well. So if anybody wants a copy of that, let me know. But I hope this has been helpful just to get a good understanding of it. Okay. And thank you. And I hope you have a good rest of the day. Appreciate you joining Business Beyond Borders today. Thank you. Thank you for tuning in to Business Beyond Borders. I'm Laurence Whittam, and it's been a pleasure bringing you impactful insights tailored for the modern CPA firm. Remember, the world of accounting is vast and ever evolving, and we're here to navigate it together. For more resources and episodes, don't forget to subscribe and reach out to our experts. Until next time, keep pushing the boundaries of your business and explore the limitless possibilities beyond borders.